Good morning. I'm Catherine Ross of TheStreet here at the NYSE with Jim Cramer.
Yeah.
Jim, today the markets are down. What's going on?
In real money, I said it's crunch time. It's crunch time because we have a pincer movement against the bulls. The Fed being tone deaf. Now, there are some Fed speakers today. We have to hear what they say. Tone deaf to anything that's bad. With mortgage rates at 5%, it's really not a good level. With obvious slowing in a whole host of companies related to auto, home to lending. And then we have what I regard as being the endless, and in some ways, what some people would say unprovoked attacks on China, both economic, and then when you take a cruiser and destroyer through the Taiwan Straits, what that says is, listen, don't forget, we are a military power, China, and we don't want your hegemony. Now, against that, Vice President Pence laid out at the beginning of October a very sobering look how China has attacked us in elections, how China has spread disinformation about us, how China in the 2025 plan has tried to steal a lot of our technology. It's all a concerted effort, even though we've been very good to them, to bring us down. And so you have rhetoric that is vociferous on our end, which makes it so that there's no reason to think that China's going to get better, and no reason yet to think that Powell is going to get better. Against that, we have Larry Kudlow saying that Xi is going to spend some time with President Trump. What you need to see, a couple things have to happen. One is we have to have the extreme fear, and we're getting some extreme fear. I want to point out, as I said in Real Money, that Mark Sebastian, who is our unbelievably good VIX seer, has said that if VIX doesn't go above 25, that could be put a top in VIX as the market falls, which has historically been a good price to buy. We do have some very fine earnings that everyone's ignoring. And so I come back and I say, not a lot to do. Let it come down. We're looking at picking something at Action Alerts. We've got some faults in our portfolio, like anyone, trying to upgrade into it. Oil coming down. And everyone's been worried about oil, but maybe they should look at the price of oil. The housing affordability, the actual price of the house coming down, they should look at Zillow and they'll know. And a belief, I think, that that's growing, that unemployment is a rear-view indicator, and we might see some slowing. So, Catherine, those are all, you have to have, as I said in my Real Money piece, you have to have the recognition first. I listen to people on air, and they keep saying, well, the Fed's doing the right thing. Well, the Fed's doing the right thing if the current data stays strong. Is it doing the right thing if the current data gets weak? And my answer to that is no. And that's why I like data dependence. Data dependence says, you know what, maybe we've tightened so much that the average working person may not be doing as well 6 months from now. Let's say that I was with some great technologists last night, and they're talking about the fourth industrial revolution. What happens when Jeff Bezos comes through and says, okay, listen, we're no longer going to have checkers. We have this. And this is pervasive. I know that there were people last night at a dinner I went to who talked about autonomous driving of trucks. I do think millennials don't want to become truck drivers because I think they very much fear that their job will be taken away by autonomous. But I do think that there are undercurrents, cross currents that make it so that it's ill-advised to be saying 3 rate hikes next year. And if that's walked back a bit and we get any cessation in China rhetoric, then you're going to say, why didn't I buy? So my compromise is to say, maybe you don't buy anything yet, maybe you pick at something, but the selling here seems increasingly extreme. So I want to caution against it, particularly because you see with good numbers like McDonald's and Verizon, United Technologies, things can rally. So I'm offering a view which just says panic is not a strategy. It's been my view for a long time, other than when I said there was a crowded theater with fire in it at Dow 11,000 and Dow 10,000 going to Dow 6,500. This is not one of those times.
Both the Dow and the S&P 500 are touching 3-month lows right now.
Yes.
And I'm wondering, for investors, what areas should they be looking at?
Well, you know what? I think that you have to take a hard look at up-down volume. 9-to-1. We had 10-to-1 when we bottomed last time, which is, a week ago. Now, we took out some key levels, obviously. I'm not oblivious to that, but I think what you need to see is you need to see yields that are 4.5 to 5 begin to hold stocks. So, for instance, we own BP, and oil's down. And BP's got a 5% yield, and if the stock can hold 42, I think that's very positive. Verizon at that 4% yield, and that's very good. We have to see what AT&T reports tomorrow. But I do think that there's enough good that at this point, with the market very oversold, and I want to see the oscillator tonight. It was up, almost -5 again last night, and that's the S&P proprietary oscillator that I get. I start thinking, okay, I'd rather be buyer than seller, but I've got to find things that we go over for action alerts. Where is our last buy? We don't want to buy higher than our last buy, and we still have a lot of stocks that we bought that were below. I think that one of the things that that we're not blowing up. One of the things I think you want to look at is the banks have been given away. People are very afraid of the banks, and I think that's probably a mistake. Maybe they're reflecting the fact that the Fed will not do the aggressive rate hikes, but I do think that you're looking at stocks that are selling at incredibly low multiples. People don't like to own the banks in an environment like this, but you're selling Citigroup to Mike Corbett. That's who's buying it. And I don't like to sell to a big buyback by a company where you're trying to buy back about 10% of the company because it's selling below tangible book. I was with someone from telling at tangible book. I was with someone from Goldman last night, reminding that Goldman is at 1.2 times tangible book. These are extreme levels. They don't even take into account that maybe the M&A business is good. Or, there's other things besides just the playing out what they're going to earn on the yield curve. So I'm not sanguine. As people know, I've been saying, listen, I'm very worried. I said yesterday, I really don't like what's happening in Washington. But I also know that there's good things happening, and they're going to soon begin to look like they're completely overlooked. And that has never been the right way to play it.
This morning, Caterpillar, which is you like Caterpillar a lot.
It's a good company, but at 158, I didn't like it. Now at it's lost 50 straight points, and now suddenly people are turning negative.
It announced earnings.
I would say that, it announced earnings, and the costs were up. They indicated that the inventories weren't down; they were up. But they have such great orders. I could understand why the inventory should be up. I do think that the tariffs hurt them. But again, is that really revelatory? I thought Cat was fine at 158. No, at 110, yeah. 110, yeah. I like it. I know it's going lower. I know the chart's bad. I'm not oblivious to these things. But I'm trying to take a little longer term view than today.
So Caterpillar is also real money stock of the day. And I just want to understand, were you surprised when it plunged after beating earnings?
No, because they told you in the last quarter, and the reason why I got tepid about it was they said, listen, this is probably the high water mark. And then they reaffirmed that it was the high water mark. They said it twice. So I was aghast at 150. I grow less, unless it's a GE where the balance sheet's deteriorating, I grow less aghast as a great American company comes down in price. And do I think that it should bottom here? I don't know, but I do think that those who are suddenly turning on it with the market down 450 points, maybe going down 600, 700, I don't know, are if I'm not inclined to buy Cat. I did a piece about United Rentals the other day. They don't use Cat, they use other companies' equipment, but saying that, listen, I'm concerned about this. But I was more concerned about the stock than I am about the company. And that's how I'm putting it.
I just want to get your quick take on an earnings preview. And that's for Mattel or Boeing, either of those. What do you think?
From which one?
Mattel or Boeing?
Well, Mattel's got a really bad balance sheet. You have to be very careful. And if Hasbro had a disappointing quarter, Mattel's will be disappointing. New CEO. Boeing is another stock where if they mention China, it'll get hit. One out of every 4 planes is bought by the Chinese, but United Technologies had extraordinary aerospace, as did Honeywell. So I don't want to get in front of Boeing unless I find that the market bounces, and then I think you probably can. But I don't want to get in front of Boeing because the problem is that anything is taken out of context right here and sell. But Boeing is very good, and if you like Boeing, you should buy Honeywell.
What is your advice to any investor or anyone looking at the market right now throughout the rest of the week?
Well, look, there are a lot of fine American companies that are being thrown away, and you ought to check to see what we're saying in action alerts, because that's what the product is about, is to try to make sense of it and choose good stocks. And that's what people have to do.
All right, and we're going to talk more about that on Action Alerts Plus, the members-only video that we're about to do. Thank you for joining me, Jim. I really appreciate your insight.
Sure, absolutely.
I'm Catherine Ross of TheStreet. I'll see you guys tomorrow.